Welcome back to another episode of Coffee and Coin. I've got my team on the pod with me today. Welcome, Liz. Welcome, Tay.
Hello.
Hi.
So, we decided to record an episode on financial self-care because September is actually Financial Self-Care Month, if you didn't know, and October is Financial Planning Month. So, it's a nice way to give yourself some self-care. Well, it's actually just general self-care month, but we turned it into financial self-care. And then some planning, which both are really important to a healthy financial life. So I think most people just think about mental and physical well-being when it comes to self-care, but I have really realized over the years, especially in this line of work, that your financial self-care is probably one of the most important to even having good mental and physical health. Because if you don't have that money situated, then you're going to feel nervous and anxiety and worried and stressed and all the bad things when it comes to spending money, right? If you don't have your financial life in check. So obviously at Factora, we are all about that, but we're all going to do it differently because we're all individuals and have unique situations and goals. So we kind of wanted to just share ours today. And so, yeah, thanks for coming on the pod, y'all, and being willing to share everything about your financial life per usual.
Excited to be back.
So before we jump in, I think it would be helpful if you guys just introduced yourself and, in case people haven't listened to episodes with you on it, who you are, where you live, and then we'll dig into our financial self-care practices. Tay, you want to kick us off?
Sure. Well, a little self-plug if you don't know me. I just did an episode, like 2 episodes back, you can go listen to, after not being on the pod for a year. So now I'm here twice in 2 weeks. But I'm Taylor. I do all the marketing at Factora. I've been hanging around here for, almost 3 years now. I think 3 years in December. That's crazy. And I live in Austin. I have a partner, but we keep our finances separate for the most part. So most of what I'll be sharing today will be about my personal practices with financial self-care. And I don't know, what else do you need to know from me today?
Well, if people want to go listen to that episode, she's really into business investing and she has part ownership in a group of Pilates studios. So I feel like that's worth sharing as well.
Sure.
Liz, what about you? Tell us who you are, what you're all about.
I'm Liz. I am the community manager here at Factora. I came into the Factora universe in spring of 2021 when I took my Wealth Circle, and I have just been hanging around since, first as a facilitator inside the Wealth Circle and then taking on a bigger role here. I live in Tampa, Florida with my husband and our dog. And when I'm talking about my finances today, I do combine all my finances with my partner. So that is something important to know. Yeah.
Liz also has a cool episode. If anyone is interested in acquiring real estate, Liz has a goal to acquire 10 properties in 10 years, and she's moving and grooving. So definitely check that out. Cool. Well, let's dive into talking about our saving and investing practices first and foremost, because something that we are so keen on here at Factora that I think is the ultimate financial fundamental is paying yourself first. So yes, we love to go out and spend our hard-earned money on things that we desire. But before we do any of that, it's so important to pay future you and make sure that your upcoming and far off in the distance goals are considered first. So let's just kind of go into the things that we do to each manage our money. Who wants to kick it off?
I can.
Go for it.
So I'm sure we all do this, but automating savings and investing amounts into various accounts. So I have a couple different high yield savings accounts for my near-term goals, and I break that off by goal. So an emergency fund, a travel account, and then some other ones just so I can see the amounts in each account separately, as well as automating my investments. So 401k, my Roth IRA, and then as well as my brokerage accounts, and that's myself and my husband. So every time we get a paycheck, those automations happen automatically, and we don't see that money in our checking account to spend. And then additionally too, we have auto pay set up for our big bills. So credit card, mortgage, utilities, things like that are necessities to pay down every month. And then additionally too, my partner and I, we have a divide and conquer approach with our finances. So I really focus on our investments and future thinking when it comes to our finances, because that's just the way my brain works. My partner, he very much likes the budgeting and diving into how we're spending our money and making sure we're on track there. So he focuses on more of the day-to-day stuff. So, yeah.
Well, I'm really glad we have Taylor on that episode today, because ditto to everything you said. I guess I didn't share in the beginning that I also have a husband who we are fully combined with our finances. And so we manage everything as a household. And although I've never used that term, the divide and conquer approach, that is exactly what we do. And we have it set up in the same way. I'm basically forward looking and investment strategies. Although I will say when it comes to our paper asset portfolio, I come up with how much money we can put into it. And since Jake is actually a lot more interested in different sectors of the economy and what can be invested in, for instance, energy, he does a lot more research and focus there. So
I've never heard anyone talk about energy with as much excitement as I have heard Jake talk about it.
We had a friend's dad over here yesterday who just bought a solar company in his retirement, and they were gabbing about solar for an hour. I was like, shut up, we're watching football. Go outside and stare at the panels, but I don't need to hear this again. I already heard all the research. I already know all the different energy companies were invested. It is boring. And the only reason that I'm being so bold about that is just in case any listeners are thinking, well, I'm not that interested in these things. Maybe your partner is, or that's okay. All of the stock market investing that I focus on is just making sure that a significant portion, like 80 to 90% of the money that we do invest in the stock market, is really going into diversified funds. And then he gets to play with that last 10 to 20% on individual stocks that, again, he spends hours researching and staying apprised of, which I ain't got time for or interest in. So that is okay. But just to finalize mine before we move on to Tay's, I do the exact same thing. We spend a lot of our income on automated investments and automated savings. So we are also contributing to our 401k well past the match, trying to max out. And same with IRAs. And for savings, we used to keep $40,000 in our emergency fund. Once we had a child, we bumped that up to $50,000. That is just sitting there, taking advantage of a nice almost 5% APY. We're quite happy with it. And then the only other active savings we're doing right now is a monthly automation to our travel account, so that when we go and travel, we just pay our travel back from that account instead of being like, we got an extra $800 to take care of this month. So again, it's just all bucketed and pre-thought through so that it's not a situation that we have to deal with that wasn't prepared for. What about you, Tay?
Well, I hate to break it to you, but I don't think my answers are going to be that different, but maybe a couple that are slightly varied. So, I mean, yeah, same thing with automations, like whatever I can automate, I do. So saving, investing wise, that looks like I automatically save $500 from every paycheck just into my high yield savings account. That could go to various things. Right now, most of my buckets are full. So it's just bumping into, say, my travel fund, which just always feels exciting to have a good chunk in there. I also have in my savings account, all of any interest I earn automatically goes into the travel fund as well. So that one just gets padded kind of with fun little surprises, which is nice. And then, yeah, my emergencies fund is full for now. So hopefully for a while. So
what do you have in there?
In my emergency fund?
Yeah.
Okay. So actually after our call last week, I combined it. So I did have 25 for my true emergency fund and then 5K in like an air conditioning fund because our AC unit is 20 plus years old and we have just been waiting for it to die since we moved in. But we just made it through the hottest summer ever and it's still kicking. So I was like, maybe it'll survive a little longer. But anyways, I just combined those two. So now I guess there's technically 30K in my emergency fund.
And then wait, before you keep going, Liz, what's in your emergency fund? And didn't your AC unit actually just die?
Yeah. Our AC unit did just die, so I do not wish that upon anyone. We were able to get it temporarily fixed, but we will be replacing it because the tech was like, it's not a matter of if, it's a matter of when at this point. So things tend to go out here in like 10 to 15 years. So that is not fun in Florida. But we have 20K in ours and we are going to bump it up to 30K, hopefully within like the next 6 months to a year.
Got it. Awesome. Okay. So I just wanted listeners to hear different emergency funds for different types of profiles. Like Liz and her husband don't have a child. And Tay, is that just your emergency fund on your own?
Mm-hmm.
Great. She's just sitting liquid.
Yeah. Harry has, I forget what's in his actual emergency fund, but I think his is also in like around 20 or 30. He has a little more cash than I think he needs on hand, but that's okay.
Well, I know someone you could talk to about how to deploy it.
We've got some plans we're working on.
So any other money habits you practice monthly?
Yeah. So for me, the other big thing is like, because I talked about this in the last episode, but basically like I teach at the Pilates studio that I have ownership in. So I make income two ways, from teaching / helping with our training program that like trains our new instructors. And that's hourly based on the amount of work I put into the studios that month. And then I get dividends from being an owner, or get distributions for being an owner right now on a monthly cadence as well. So everything I earn from teaching automatically goes into a simple IRA that I have through Pure. And then everything I get in distributions comes into my checking account first, and then I kind of deploy it in different ways. So I have a little money check-in with myself at the end of every month. I use Notion for this. I have like a template where I track my income every month just because it is variable. And then I track where I'm putting savings and investing. So I just like to have like a filterable, is that a word? Filterable view of kind of what that's looking like. So once a month I sit down, I fill that out. And then I, depending on short-term goals, like what I'm working on, I'll either put extra savings from distributions into my high yield savings account, or right now it's mostly getting funneled into my brokerage account, which I'm trying to kind of bump up a little bit. So I just take the time to kind of go through there and then use that time to see if I need to make any adjustments to my automations anywhere else. I'll sometimes do it at a midway point as well. I actually just did it this morning in prep for this call. These podcasts are keeping me very on top of my money habits, to be honest. But so one of the funny things is that like, because I contribute to both a 401k through Factora and a simple IRA, they both have higher maxes, but I can only max them out to the 401k match for that year, which is kind of a funky rule. But so I just have to be very careful about my contributions from both of those sources. So as of, I think the end of September, I'll have met that 22,500 for the year. So now I have to kind of stop distributions from those places, or stop those automations, and just reallocate them elsewhere. So it's a good thing to keep top of mind.
What will you be doing with that money instead? Putting it to your brokerage for midterm goals?
Yep. Yeah. All my short-term goals are pretty much saved for. So yeah, just starting to pad the brokerage for more midterm goals, which feels exciting.
I have to say, I hope that this is really empowering for any listeners, because one of the things I always notice when I talk to you guys, are just very money-minded Factora women. It's like, once you set up these systems, it's kind of just, I don't want to say boring, because I actually love checking in on my money, but it's kind of like, wah, wah, like this is tended to.
Yeah.
Oh, I've maxed this out. Now I just need to change what I'm focused on to a different one of my buckets. And then to hear you say, well, all my short-term goals are fulfilled. So really, I'm just going to put it in my overflow medium term that I don't have an actual particular goal for, but I have an investment strategy to, earn compound interest and then leave it there until I need it. And so that's just what I want for everyone. That calm and that clarity of where your money is, what your goals are, and when you need to transition from one goal because it's full to the next, that you have the opportunity to do that. Okay. So I guess that just really encompasses why we're recording this episode, because financial self-care is being aware of your money and where it's going. And that's why we wanted to kick it off with, how do you save and invest first? Because that's what millionaires do. They pay themselves first. And that is the biggest transition that women who come into the wealth circle make. Because we've all been in that stage of life where you have income and then you spend it. And then you try and prioritize what's left over into the savings and investments. And it's just so small. It feels insignificant and like you can't do it. And so you start telling yourself, when I make more money, I'll save and invest. But it's the opposite. You have to save and invest first. Automations are a brilliant invention of this century, and every bank account offers them for free. So you got to be utilizing them. Okay. Anything else to share about your approach to practicing self-care when it comes to saving or investing? Do you do any sort of quarterly rejiggering of your portfolio? Or Liz, if you are the main kind of investment strategist, how do you come up with new or review current or transition strategies? Like, when does that happen for you?
So for us, we have a couple of different meetings. So once a week, we have a relationship check-in meeting, and we just talk about expenses the week ahead or anything the prior week that maybe was a surprise or we weren't expecting that month. So that's really my husband checking in on the budget and seeing what's what. And then once a month, that weekly meeting is just a bigger meeting where we're kind of reviewing and going through everything, making sure, nothing looks too weird going on the investment accounts. Updating our net worth spreadsheet. We now use an app to track that, so we don't have to use the spreadsheets that we got in the Wealth Circle, but sometimes we will just do it manually to project out where we think we can be in a couple of months. And then the other big thing we do is we have a quarterly goal meeting, which is really where I'm looking at the investment accounts on a deeper level and seeing if we have to restructure anything. But again, we're not doing any single stock investments or anything like that. We're in index funds, ETFs, things like that. So there really isn't much to adjust or reallocate too frequently. So it's pretty easy to just kind of set it and forget it, check in on it, maybe structure something different here or there as we continue to learn or know better. I know when we initially started investing, we focused really on target date funds just because it was easier to get started. And we are now going with a more do-it-yourself approach where we are picking the funds ourselves instead of the account kind of doing it for us. So we are continuing to refine that as we go. But again, it's pretty boring. Once you pick something, we kind of just let it sit. So
that's awesome. I love all of that. The weekly, monthly, quarterly structure. It makes total sense. Talk to me a little bit about some of the apps that you use. When you say that he's managing the budget, are you using any sort of app or spreadsheets for that?
Yeah, so he likes, you need a budget. It's on him to use what he wants to use. We like that it connects with our different accounts, and then he's able to go in and label the different spending based off of our buckets and values-based spending, which I think we'll talk about in a little bit here. And then in terms of monitoring our net worth, we are using the Empower app to look at that. It is one of many that is out there. We just use it because it's free. And just lets us see a snapshot of what's going on. Because I was finding when we were manually tracking it, I was getting a little too obsessive with it and doing it too frequently. This way I don't have to. I know it's being tracked, and I can just go in, look when we're having one of these meetings, or look if there's something I want to update, because there's a couple of things I have to manually update. But I usually just do it once a month and then know that we're good. And it's in there. If either one of us wants to look at it, we both have to log in.
Follow up to that. So you need a budget is also often more commonly referred to probably as YNAB. It's definitely a Factora favorite. Do you use a free or a premium version?
He pays for the premium version, and this is probably terrible to say, but I do not go in there frequently. He truly manages it, and I trust him that he's got it. Like, he knows what we're able to spend each month in the different buckets. And then, sometimes we're pulling from the house bucket a little bit more because we have to fix something and it has to go into the miscellaneous spending, and we're not getting to maybe eat out as much. Those are all things he's tracking. So I truly have been in there like 1 or 2 times to look at it, but it works for him in his brain. So he's in there using it, but it is the premium version. I think it's like $80 a year. And
I don't think that's terrible to say at all. I think that's the whole divide and conquer approach. He's handling the day-to-day expenses and you're doing more of the strategy, longer term vision. That's exactly how we have it divided in our home. And then Empower, that's formerly Personal Capital. Mm-hmm. And just for listeners who might be interested in a free net worth tracking tool, it's a good one. It is, in my opinion, very ugly and a little annoying because it's constantly telling you that you need to invest in their platform, but you do not need to do that. You can obviously just use it for the free, connect to your different accounts and have your net worth at a glance in real time, which it's amazing for. And I used it for years until I switched to Kubera, which I'm a big fan of. Okay. Any other apps or tools you use that would be worth sharing?
I think those are the big ones. Everything else is like an auto pay situation inside our financial institution. So that like comes with Vanguard or Capital One or whatever it is that you choose to use.
What about your quarterly meetings? Do you document those, or do you have a certain set of questions that you go over?
So we document them, and we actually just did one again this weekend because it'd been a while. We'd lapsed. We have a spreadsheet with our 1, 2.5, 5-year, and 10-year goals. So we're able to go in, see where we're at really on like the 1 to 2.5 years. A lot of these goals roll up into each other. Like if we accomplish the 1 and the 2.5 years, we'll be able to accomplish the 5-year and 10-year goals. So we really go in and look at that. And then additionally too, at the beginning of each year, I map out where I think our net worth can be based off of our stock market investments, of how much we're putting in to our various accounts, how much we're putting into our savings goals and things like that. And then we try to see where we are compared to that year end number and seeing how far off we are. And based off of what we're already doing, if we will meet it, exceed it, or might be a little bit under, to see if there's some way we can try to make it up. So for this year, we are a little bit off. My husband lost his job earlier this year, so we are not saving and investing as aggressively as we had planned, which is okay. He's starting his new job next week, so we will be able to up all of our investments and savings here pretty soon. We will not exceed our goal, but again, life ebbs and flows. So those are the things that we do during the quarterly meeting, is really looking at those long-term, mid-term, near-term goals and seeing how we're doing, and then also just looking at our net worth goal for the year.
I love it. And you're right. Everything ebbs and flows, which is why it's so good to have check-ins about this to see what needs to change for an upcoming quarter or year. My final question for you is, when you're doing that projection of where your net worth could be, what are you doing for that? Do you use a compound interest calculator, or how do you do that?
So I don't really factor in compound interest. I'm truly just putting in how much we're putting into our investment accounts. Like this year, we knew we were going to max out our Roth IRAs. So ideally, the market is continuing to grow up, so we will exceed it. It will go up, but we're putting in the maximum amount in our Roth IRAs. We're maxing out our HSA for the first time this year. How much money are we putting in our brokerage each month? We usually do like $200 a month. How much is going into our 401ks each month? How much into our savings goals and things like that? So like say like all in every month, we are putting $5,000 into these various accounts. That's how I'm anticipating the net worth to go up. That doesn't factor in our house value going up and us having more equity. It doesn't factor what the market's doing. So like it could be less if the market tanks and has a terrible year, but I'm at least able to see what our investment amounts are and where we probably should be. And then from there, I typically say, okay, if we're able to invest $50,000 this year, how can we get to 60? Where can we come up with an extra $10,000, either not spending as much in a certain area or trying to find a way to make more money?
I love that. I think that's a great thing to do at the beginning of the year, or even in advance of the year starting, just based on your incomes and or side hustles, like where could you put that money and see, okay, if we're putting in $5,000 to these various accounts, then our net worth should increase by at least $60,000 by year end without even factoring in the value of our other assets.
Exactly.
Love it. And doesn't it just motivate you to do it? When you can kind of see the path before. I know, years ago, before I even was obsessed with the monies and in fear of looking at my accounts, that was the big differentiator. Like I couldn't see how the future could look different than my current situation. And so I was not motivated to do any of these, which it is work, y'all. Like these women come into the Wealth Circle and they're like, oh shit, I have had this same bank account since a college fair and it's getting a $50, fee on it monthly because I'm no longer a student. I guess I have to deal with that. And I need to open up this high yield savings and this brokerage and set up the automations. But once you do it, it feels so good to watch each of those accounts just fill with you prioritizing your financial self-care automatically on a monthly basis. And that's before these check-ins where a quarter has passed and you're like, shit, I'm $20,000 more wealthy than I was a quarter ago. That feels great. Okay, I'm off the horn. But I have more questions for y'all. So obviously self-care with our money is not just about saving and investing, although I would argue that is the most essential part. We're going to buy things. Life costs money and we deserve to enjoy our life while we're here and spend our income how it makes sense, preferably in line with our values, which at Factora, we're really big on values because values can act like a filter for our spending decisions. So I wanted to go around and share what our values are. Liz, you want to kick us off?
Sure. I would love to. So mine are vitality, which is health, wellness, emotional, physical, spiritual well-being, all of the above, making sure that we are really prioritizing that. Community, so friends and family, seeing them. We do not live in an area where we've made many friends yet. We've only been here 8 months. We're working on that. But seeing the friends that we do know in different areas, as well as seeing our family as much as we can. And then boundless, which is prioritizing travel and experiences over things.
I love boundless. That's a good one. We also always just talk about, your values don't have to be just a boring word that everyone understands. It can be any word that only makes sense to you. So, Tay, let's hear your values.
I used to have mine as more creative words. And then honestly, I used to forget what that meant to me. And so I have gone back to the route of more traditionally named values. I remember Sarah, our coach, asked me one time, she's like, let's chat about your values. And I was like, here they are. And she's like, and what do those mean? I was like, great question. And I still obviously know what my personal values were, but one of them was hydration, and one of I don't know. I had some weird ones, and they were just a little too fluffy. So I
That's hilarious. Okay, what are they?
Pulled them back. So mine are community, wealth, health, flexibility, and exploration. I think most of those are pretty self-explanatory. Health, I would say that goes into all facets of health, physical health, mental health, all the things. Flexibility, this is more just about having, and they kind of all go back to money, honestly, but having the ability to work from different places, to have schedule freedom, to have kind of the ability, my sister recently had brain surgery, and just the fact that I could go home for a whole week and be with family and support family, still get work done and things I needed to be done was huge. And I know Allegra and I chatted about this then, but there have been times where I would not have been able to do that. So to me, that was really huge. So just the ability to support people and myself. And then exploration is more akin to Liz's boundless, but just the ability to explore travel wise, but also experiences within our own city, and just prioritizing just kind of having fun and playing and adventure over buying more stuff, which is. I love stuff. So there's still stuff I spend money on, but I try to, keep it in check.
Okay. We have some in common. wealth is my first one. No surprise there. And then I think all three of us have connection, which is awesome. I really took a while to come up with that word because my initial word was partnership with my husband, partnership in business, just general partnership. I think two heads are better than one, but I added a daughter to the equation and I just don't really partner with her yet because she doesn't speak and she fully relies on me. So anyways, we opened this one up to connection. Another one for me is mensana and corporosana. That's my version of health, but it's a Latin phrase for a healthy mind and a healthy body. So I really do prioritize therapy, business coaching. I'm doing a life coach certification. Like I really want to be able to manage my mind better so that I can manage my stress level better. And I think that when my mind is in a good place, I'm more focused on my body being in a good place. And so they're all connected. And then the last two are leverage. I really think that there are so many people who are more talented than me at a lot of things. And so I want to leverage their expertise, whether that just means dry cleaning. You know, I used to literally try and buy clothes that did not need dry cleaning or just say, fuck it and wash them. And then I'd end up ruining them. But like, you know, you got to just leverage other people who do things better than you and remove the headache. And then the final one is bold. I think for me, I want to be able to look back on my life and think I didn't just play it safe. I was bold. And when I decided to do something, I did it all the way deeply with big intentions. So them's my values. Let's talk about, I don't know, something you purchased recently that's in line with your values.
Well, I'm about to spend, I don't know, this is sort of purchasing, sort of not, but I'm about to spend 3 weeks traveling, which checks off several of these. Part of it is going to be some downtime to just like for physical and mental health. Some of it's going to be exploration. I'm going to I'm going to 5 countries, but I'm going to 3 countries that I've never been to before. So very excited about that. And then we're traveling with one of my very best friends and her husband, who live abroad. So I don't get to see them very often. So we've really been super intentional about planning this trip and making sure we kind of bake in a lot of good time together. And we're, you know, spending on really lovely places to stay with like amazing views and just like, I mean, honestly, none of it's that expensive because of the time we're traveling. And I don't know, Europe is just, there's a lot of good deals to be found out there that are not, I feel like, found in the Airbnb world in the US. But so yeah, definitely putting a good little chunk behind this trip, which I'm super excited about. But I'm always having a full travel fund and spending on travel. Like okay, well, actually, I'll give you a better example. We're also going to Mexico in November, and it's for Harry's, my partner's friend's like wedding. And we've been very excited about this trip. Like we finally got around to like looking at flights, and they are expensive because it is a week of Thanksgiving. And we were like, do we still go? Like this is like, it just felt like a bit crazy. And so we took some time to like really like get a little bit creative with it. And we got the price down from what we were initially seeing, but we did kind of just have the conversation like, no, like these are people we really care about. Like this is going to be a very unique experience. They're having, they're both Indian. So it's going to be like a 3-day long celebration, which neither of us have gotten to attend before. So I think there's a lot of new experiences there, as well as community. And so like for us, this wedding in particular was extra kind of worth it. But that is something we kind of had to run through our filters after the initial kind of like sticker shock, I guess.
I love that. I'm going to be honest, I'm a little green about the Europe travel because I feel like everyone's been in Europe this summer. Like no one traveled for 3 years, it feels like. And now everyone's in Europe and I'm watching all of their beautiful, I mean, you just can't compare a city street anywhere in America with an adorable European town with their cobblestone and their just stucco walls. And anyways, I got to plan a Europe trip is what I'm realizing right here on this call.
You told me 2 summers ago that you're like, why go to North Carolina when we could go to Europe for the summer? So maybe this is you just next summer. you know?
I know.
But it's out there.
It got complicated with a baby. It really
It
did.
complicated with a baby, but
I was like, it'll be great. I'll be a French mom. I'll just go to France and she'll shuffle right in. And then I was like, well, shit, she's got like these appointments at her, like for her healthcare providers because she was coming up on whatever. They have all these like 9 months, 12 months, etc. TBD on my next European adventure. But for me, I would say a big thing I spent on that's in line with my values is this life coach certificate. Because like I said, I think that it is really important to have a healthy mind. So that's that. Is leveraging someone else's expertise. I picked a program that I really respect, the Life Coach School by Brooke Castillo. She's someone I followed for years. I do think it has the opportunity to add to my wealth. I think it's quite bold, and it'll allow for more connection, both personal self-growth, and hopefully with all the people around me as I manage my mind better and facilitate better relationships. What about you, Liz?
I was going to say a travel and trip too, but I will switch it up to be a little different. I am in the middle of evaluating some different local art classes. Art is something that I did a lot in high school, and just as you get to be an adult, you don't do your hobbies as much anymore. So it aligns with my value of boundless because it's an experience and it's something that will get me out of the house as well as community. Hopefully I'll get to meet some new people, maybe some new friends, and then also too, just for my mental health and well-being in general, just to kind of turn my brain off and get to do something fun and be a little creative.
I love that. What kind of art, Liz?
I'm not sure yet. I've done all types, literally every art class I could take in high school I did. I really do like painting, so I'm hoping I can find a local painting class.
That is so fun. Okay, what is the best thing that you've purchased this year that's given you your time back?
Okay, wait, can I pause really quick? I have one thing to add about values, or one question to add. Do you guys have like a number if you're going to make a purchase on something, especially if it's bigger? Like, does it have to meet X number of values, or is one enough? Like, I don't know that I have an answer for this, so I'm curious if you guys do.
I usually say as long as it meets one, it's typically fine. But I also do filter things through like a dollar amount where like Brian and I might need to discuss it. It's usually over like 100, 150. Where we also talk about it too, just because we do combine our finances. Like we trust each other to spend things appropriately and in alignment with our values. Like these are my values, but it's values that we came up with together. So I would say one, it's definitely a bonus point where it like aligns with multiple, and then it's really a no-brainer to spend the money.
Yeah, I kind of agree that there is a price threshold where I want it to meet more than one value if it's going to be a significant investment. So for me, that's probably anything over 500. I'm gonna really make sure that it's touching more than one value.
Yeah, I feel like that feels pretty good. Like multiple hundreds. Like I'm probably running it through. Like it's got to hit 2 or 3. I think that's what for this trip it was like. It hit like 3 or 4, so we were feeling like pretty good about it. But
yeah, it's so nice to be able to come back to and like really use that system when you are in a dilemma, because I've definitely been there. For instance, I just moved my living room couch into my office. It's behind me for those of you watching on YouTube. And I started looking on Facebook Marketplace to do a living room refresh. And then I just realized that I didn't want to spend any money. So how could I do a living room refresh with just my own things? And we did that. And I love the outcome. And so that took me a while to kind of come up with, because I was like, well, if I'm moving my couch, I obviously need to buy a new one. It's like, well, or I could use the like love seat that's in Jake's office, which ultimately we did. And it's great for now. So, okay. Back to my question. What is something that you purchased that has given you your time back?
I can go first. So we haven't bought it yet, but we are in the middle of getting quotes. So we are renovating our garage into a master bedroom to be an in-law suite that we'll be able to rent out on Airbnb. And while we have done a lot of DIY projects in our house, we are hiring a contractor. We are not doing much of anything for it, maybe a couple of touch-up things at the end, but very, very easy things like painting or something like that if it will help us save a little bit. But it will be nice to have a professional in there doing it. We're just going to pick the finishes and not have to worry about much of anything, and they can deal with all the problems and construction, and we will be living through it, but it will be nice to not have to manage all of it.
Totally. And I send you all of the pre-contracting blessings because it is so nice to hire a professional. We've done that, but even hiring a professional, a live-in renovation, you're going to hear the drilling, there's going to be dust, which is even better that you have someone dealing with it that you can say, yo, you need to let me know when you're doing this, or you have to stop at this time because I have work or whatever. So that's awesome. What about you, Tay?
Okay, I thought of a better one since I put my notes in here. But the one I was going to say is that I have been outsourcing groceries for like, I don't know, a couple of years now. Like I put the order in and then someone shops and brings them to my house. And that feels like every time I see the additional charge of the surfaces over what I'm actually buying, it feels like a little like, oh, I could do this myself. But ultimately, like that is one less errand I have to run a week. It means that I always have like healthy food on hand. Like I don't put it off. I just get it done. So I do really think that's worth it. But more on the financial track, we did have our property taxes appealed this year, and we went back and forth between doing it ourselves and hiring someone to do it. And we ended up hiring someone to do it. At the time we had like a bunch of other house projects going on and some things going on with family. And so like, it was something we could have done but it was the first time we were going through this process. And so we just decided, instead of taking the time to research and figure it out and file it all ourselves, just pay someone to do it. And the company kind of works that, they only take a percentage of whatever you actually get your taxes lowered to. So, and they did get them lowered. So it worked out in the end, but that felt like a nice thing to just be like, off of our brains and done for us.
I love that. Mine is childcare. I think there is no better expense in the world than making sure you have safe, amazing childcare. And so that has been a huge thing that we've prioritized this year because we're two working parents. And I want to make sure that this little girl is getting all of the growth and focus and dedicated like brain enhancing skills that I can't give to her during a regular workday. Okay, so I think we did a good job of talking about how we practice self-care with our savings and investing through paying ourselves first and all those automations and different savings and investment accounts. And then we turned our focus to what we do in terms of spending based on our values and how we practice self-care there. Before we wrap this episode, are there any other self-care practices that you do that we maybe did not discuss or you think is a best practice that's worth sharing with our listeners?
I would say a big one is just having open and honest communication. And I have a partner, so that means with my husband. But if you are single, don't have a partner, don't share any of your money stuff because it's a new relationship, etc. You need to have open and honest, transparent view into your finances by yourself too. Writing down your goals, writing things out, actually seeing where you are is like number one when it comes to financial self-care. I think if you can't be honest with yourself and your spending habits or how you're saving and everything like that, you're not really going to be able to see the path forward to reach your big goals. And then the other thing too, that is really big for us is having some flex spending set aside because surprises do pop up like outside of an emergency fund. Like you have to get your oil changed every so often. That costs money. That's not a true emergency. That's something like we bake into like our annual thing every year. So we have like a flex account that's like $2,500 in there for like a surprise gift, or we're going to a housewarming or something like that. Cause then we're truly not charging it and not having the funds to pay for it the next month when the credit card bill is due. So those are the two that I would think of.
Those are great. What do you got, Tay?
Okay, I have 3. One, because I did not used to be very good about this, but I make sure that I pay my quarterly estimated taxes from distributions. The interest rates on these are going up and up. It's currently 7%. It's going up to 8% starting in October of this year. So like people who like there was definitely a time when right when we started making distributions that I would just pay my taxes from that with the rest of my taxes. And then I got hit with a nice little interest fee that didn't feel very good. So it's on my calendar. I have an alarm set to remind me to pay those every quarter. And part of that is also every time I get distributions, I make sure to funnel X% of that straight into a bucket for estimated taxes so that it's not an issue when it comes around. So if you receive any sort of distribution outside your W-2 or income outside W-2, make sure you pay your estimated taxes. And then anytime I get a bonus or a raise or unexpected income, I try to prioritize a lot of it towards future self. So whether that's an investment account or a savings goal that's for something that's coming up, and then save a little bit of something for like a fun little lifestyle treat or something. But just try to be really intentional about where that's going. And then my third one is that I, similar to how I have like automations for savings and investings, I also have a couple of recurring donations to like causes that I care about. Just not huge amounts, but small amounts every month. And I think that's just, we talk a lot about becoming wealthy so that we can positively impact our communities. And I hope for those numbers to increase and for the ways I interact with my community to just only increase over time. But that feels like a good place to start for now.
These are all so good. I'll add two more to y'all's. I would say one of the best things I do for financial self-care is just look at my net worth at a glance on a monthly basis. So I use an app called Kubera. I think it's really, really great for anyone, but especially if you're an investor who doesn't just have stock market, but also has real estate and business investments. It's really easy to set up and see your assets growing in those different asset classes. So I've really enjoyed that. It's premium. I pay like maybe 160, I can't remember, but it's a lot. But for me, it is so good. It's so well done. And it has this section where you can put in your insurance. I have life insurance now that I have a kid, that you can put in beneficiaries so that if you stop being active with that account, they assume something's wrong. They email you after a certain amount of emails. If there's no response, they send like all of your information to your beneficiary. So something like that makes me feel really secure and good that I can check in on my portfolio, be really inspired to continue growing it, and also have those like smart things in place. And then the second one is just education around money. I run a financial education company with you guys, and I'm still learning. And it is important to always be learning, because learning about things is how you get comfortable talking about them and ultimately doing them. And there is just there's nothing that can compare with direct experience. So we are three women who can sit here and talk to you all day about our automations and our different accounts. But until you get comfortable with understanding what these accounts do, why you should have them, and putting your goals in place, which takes self-education, then I get it. You're not going to do it. I had this on the to-do list for my whole 20s, figure out my financial life. And it took me into my 30s to get it done. But it means continued education. So I think we'll wrap it at that. Thank y'all so much for coming on. And yeah, financial self-care. Here, here.
Here, here.